Good afternoon, fellow futures traders. It's time for the market recap, Wednesday, January the 27th. I'm John Hoagland, sitting in for Dan the Man Hodgman. Thanks for trusting us with your time. Very interesting trading day indeed. We talked about it this morning on the forecast. Already heading to the downside before the open. Equities really showing signs of cracks. In earnings, perhaps, and in politics, all that kind of weighing heavily. We did have the FOMC meeting come out today. There was no change in policy, at least for now. Some of the discussion afterwards I find interesting. We're going to look at that when we take a look at the news, of course. But interesting day in crude. The EIA surprised everyone with a near 10 million barrel draw in crude stocks. But price really didn't move on the daily chart. It's still range bound. I find that to be very interesting. The market seems to be looking for some sort of different catalyst for a move away from the current range. We've talked about this morning about the amount of open interest that has poured into crude oil in the last few sessions. And I think that, again, if you'll pardon the pun, that's bringing energy into that market. It just doesn't seem to be a fundamental fact that it is looking for its next move. We had gold and crude oil take swipes at the weekly kickoff low with no successive acceptance below those levels. However, the S&P's certainly finding some time and acceptance below that weekly kickoff level, working with a previous weekly kickoff level to the downside. So we're certainly seeing some cracks in the armor here in our equity markets. As always, make sure you like, share, comment, question, and feedback are always welcome. I do like a good heckling from time to time. Good to see you, Tanya. Felix, good morning, Charles. Tried to catch a falling knife today. Always a bad idea. Felix, when the market is directional this way, you really want to try and follow the gap rules. You're only looking for opportunities in the direction of the gap, or the S&Ps gave 3, maybe even 4 really good opportunities back in the opening range to look for chances to sell that market. And there was a lot of opportunity again today. If you fought it, hopefully you didn't get hurt too bad. Of course, we don't want that. And like Tanya says, we've all been there. Bill, good to see you. And Rob T. and Mr. Shine's Mystery Channel. Hello to everybody. I wish that I would be able to tell you, what's going to happen with equities. How much further will it go lower, or is the low in? Nobody is capable of doing that. Just kind of looking at the news here, I think it's kind of funny or ironic or whatever you want to call it. Some of the rhetoric in the statement after the FOMC, the Fed chair was talking about the economic turndown has not fallen equally on all Americans, and of course we know that. And I think there's some talk in there about how the market has really held up well. And then, of course, today it starts to show some chinks in the armor, it seems. So I haven't really had much of a chance to read through the statement. And, of course, I did not get the chance to watch the press conference afterwards. But the market, really took it on the chin today. They're saying on the news it's the worst day since October. S&Ps go lower on the year. We're only at the end of January, so we've got plenty of time to hopefully recover that. But it's going to be an interesting period of time in the markets. I think probably the best thing to do right now is just take a look at the charts, and we'll see what we saw today and how things played out for us. Here's the daily in crude oil. Now, with a 10 million barrel drop in crude stocks, this is what happened. We took a swipe here at the low of the balance area that we've been in. We took a swipe at the low from the 25th, unable to accept outside of this tight little area of balance. The market really snapped back almost to where it closed. It still seems to be looking for new information. Now, we talked about this morning the fact that over the past few sessions, we've added almost 100,000 contracts in open interest. That open interest that's new positions. That's buyers and sellers meeting and placing bets against each other. That energy is going to create an opportunity away from this area at some point. I'm a little surprised it didn't happen today with some fundamental information, which leads me to believe there's more to the hedging that's going on in this crude market than just fundamental information. We're all aware that there are some politics going on that are likely to deeply affect the crude oil and fossil fuel markets. I think they're waiting for information on how that's going to play out. I don't think anybody really knows. The 30-minute chart, the market opened, took that look at the low of the 25th. The number came out. We had a decent move to the upside, but it was unsustainable. 53.50's weekly kickoff high, not even able to necessarily get to that level. Then closing relatively close to balance. The market is in balance, so we're going to treat it that way until something changes. Something has to change in that market for us to really see anything bigger happening. So here's the S&Ps. Okay, if you've been paying attention in the forecast or the recap, or as a coaching client of mine, we've been looking for something like this to happen. The auction process just has not been successful in continuing to move to the upside. Yesterday, we just had to put in the all-time high in the regular trading hour session, and that was it. We left excess up there. We saw today that the market opened lower, continued lower. Do I think that there's more to this move? Well, here's weekly kickoff low. That's a first stage in market state change. Here's a previous weekly kickoff level here. That's a second stage in market state change. And now we've got this trend line here, which is loose. Granted, it's not, a whole bunch of perfect touch points, but it's showing that the market is at risk in changing market state. Is that market state going to be range bound, or is it going to be heading lower at some point? That we are at risk of that. I'm not gonna sugarcoat it. We could have an event to the downside. It's probably going to be just an opportunity for buyers to come in and scoop up some bargains, but we don't know. Pay attention to every day and everything that you see in the marketplace, and you trade what you see. So here is our 30-minute chart, opening with a gap, opening range remaining the high of the session, several opportunities back inside the opening range to look for this pullback to sell into this market. Just, we can look at this as opposite of the daily chart. Daily chart, we see move up, balance, move up, balance, move up, balance. Here, move down, balance, move down, balance, move down, balance. Are we jumping on the elevator to the downside here? Certainly not looking all that good. I know we've got some earnings due out here. I'm seeing Tesla missing earnings per share, revenue good, beating on revenue, missing on earnings per share. Facebook beating on both earnings per share as well as revenue. Still waiting, at least on this platform, for Apple to come out. So we're going to sit and watch and see if we can catch that happening during the session here. So the NASDAQ, how bad was it for the NASDAQ today? The NASDAQ had a lot more space below it before we start to find a market state break. And where did the market, in essence, end up going to? that level almost exactly. 13,000 is that weekly, or I'm sorry, 12,900 is that number, and the market has really just kind of driven right to it. So some question as to whether we're going to see acceptance or rejection down here. We're going to have to wait and see. Here's the 30. Pretty big move down here, ladies and gentlemen. Pretty big move. Here's 12.9. We're right at it right now. Didn't get the profile on here just yet, but the opening range, I believe, still remained the high of the regular trading hours session, and given a couple of opportunities to see this market come back to that level for the opportunity to look for that short. Boy, it was a tough trade today. Very difficult when we're used to seeing a market that is continually eating shorts all the way up, all the way up. It's very difficult to switch gears and now look to sell strength. I can get it why people probably tried to fight this move on the way down. It's what we've been doing for months. Now there's a little bit of a change to it. Be very cautious. Look for good trade location on anything you do, and don't try and catch any falling knives. Don't step in front of a freight train. All of those colloquialisms that we all think about when we're looking at trades, they're all going to be true, and it's going to be challenging. And be patient. I find that when volatility comes into the marketplace, the more patient I am, the better I perform. Think about that. Markets are going to try and goad you into getting more aggressive. It's probably not the best idea. Here's gold. Our daily in gold, we did take a swipe at that weekly kickoff low, unable to maintain price below it. Gold, here's the 30. We did open with a gap. We did take a look lower when we could not accept below weekly kickoff low. We came back up, closed the gap, and then just found balance or range-bound activity inside value high and value low for the rest of the session. The euro was not really on my radar this morning, though pretty decent opportunities. If you were looking for that long against weekly kickoff low, you probably got taken out by a stop, but it wasn't too long before the market returned back above it, then offered another opportunity to catch some of those longs. Again, no gap close, but boy, we started to get a little bit too short in the hole here, and it showed on this move back to the upside. The Japanese yen was on my radar this morning, and it kind of did exactly what I was thinking it was going to do, but it wasn't a huge opportunity, but one that just very steadily kind of went down to this level. Here's the daily. We had broken out below this trend line this morning, and I was looking for continuation of the market to get down to 9,600 weekly kickoff low. I was wrong. It was 9,601. I missed it by a tick. Didn't buy it down there, but I caught some of the move to the downside and just, was looking for 5 or 6 ticks above that important inflection level for my profit target. So we've got a break in market state in 1 degree. If we start to accept below that 9,600 level, we may see another continuation to the downside if that is in the cards. The U.S. dollar held its own pretty well today. I mean, it started up around 90.50 this morning at 8 o'clock. It's up at 90.64 the last I checked about a minute ago. So let's see if we've got any information on Apple. Not seeing it. Some of the news that we're seeing as far as wires and everything, a lot of folks are saying that the move to the downside here is a real kind of some of the key earnings that we're waiting for, some of the key earnings that we've already seen out in the marketplace. So it's been it was a long week today. Emotional down days always take it out of me. I know I'm going to make sure and get a good night's sleep here. This day in music, I was just looking at on this day in 1970, John Lennon wrote, recorded, and mixed his new single "Instant Karma" all in one day. That's just amazing to me. Just amazing to me. You know, if you're a Grateful Dead fan, Robert Hunter and Jerry Garcia wrote, I think it was "Ripple" and "Broken Down Palace" in one day. Two beautiful songs in one day. In 1973, "Superstition" was the lead single from Stevie Wonder's Talking Book album. It became number one. I didn't know this, but Jeff Beck created the original drum beat for "Superstition" while he was in the studio with Stevie Wonder. Jeff Beck's a guitarist. What's he doing playing drums? And not too much other interesting stuff here. See if there's any birthdays. Nothing too interesting. Nothing too interesting. Okay, so tomorrow morning we have some more data coming out. Tomorrow is Thursday. We're looking at GDP. Let me make sure. Let me see if this is the preliminary number because that's going to probably mean a little bit more impactful. Yeah, it is the preliminary numbers. So we have GDP tomorrow morning, 7:30. We also have international trade numbers as well as jobless claims, as always, on Thursdays at 7:30. Retail inventories at 7:30 also. Wholesale inventories at 7:30 also. We've got a 3-month bill settlement, 6-month bill settlement. We've got new home sales at 9 o'clock, misleading indicators at 9 o'clock, nat gas at 10:30, some bill and note auctions, and that's going to wrap it up for Thursday if that's not enough. Friday, we still have unemployment cost index and personal income and outlays, consumer sentiment, Michigan sentiment, pending home sales, and 3 talking feds on Friday. So there's still a lot of information coming out, lots to digest, lots of opportunities. It's going to be in a fascinating end of the week. Love the hat and hoodie. Yes, this thing is so warm and cozy. It's about 25 degrees. We got about 3-4 inches on the ground. Lacey, my dog's been going crazy out in the snow, but this thing is so cozy. I love it. Yeah, today was a little bananas, James. I'm with you on that. Okay. The link to the Micros Combine in the description doesn't seem to work. I will let them know about that, Prima. We'll make sure we get that taken care of for you. So, things are always changing in life and in trading, and it seems as though we've got a little bit of a change in the markets. Take some time tonight. Do your homework. Think about the volume. Think about anything you're seeing in open interest. Take a look at your indicators. If you're seeing any divergences, pay attention to them. Some of these markets are still range bound, like crude, like gold. They may still respect short time frame numbers. Our equities are, however, maybe moving into a longer time frame event. Be careful looking for the opportunities there. I find when volatility hits, the market will usually give you a second chance. Like in the S&Ps this morning, that opening range was the dead high. The market came all the way back, more than halfway through that opening range, and then continued its move to the downside. So look for structure in long time frame and use that shorter time frame structure to get yourself in the right side. Try not to fight a directional market, please. We like you all. We want you to succeed, and we're looking forward to it. So On that note, I'm going to call this a recap. I'll be back tomorrow morning for the market forecast at 8 a.m., taking a look at what we see, what has occurred in the overnight, and what we might be looking at for opportunities tomorrow. Get a good night's sleep. Be good to yourself. We work hard at this. We deserve to do something nice. Be nice to other people as well. Make sure you wash your hands. Be good. Get some rest. Looks like it's going to be another busy one tomorrow. We want to be prepared. If you're trading tonight, be careful. Make sure you always leave some of that powder dry for the opportunities that might come in the regular trading hour session tomorrow. I'm out of here. Let's get some good rest